What's up, guys? It's your Money Cat here, and today we're going to talk about what Mr. Warren Buffett has been up to since mid-July. He's been buying up tons of Bank of America stocks, totaling at $2.07 billion, upping his stake in that company to 11.9%. First, let's look at what some of these analysts have been saying about this move. Right off the bat, the title says experts warn it could be years before he sees a return. And these are some of the more negative opinions. So this person thinks that we're not really going to see any real traction in this group, meaning the banks, until we see higher interest rates. Similarly, the Fed has said that they're going to adjust their inflation target, which means that we're going to see low rates for a very, very long time, which plays right into this comment. Now, these are some of the more positive views. This person says the banks are trading at a very cheap value, so he thinks Buffett is doing the right thing in accumulating it now so he can catch all of the upward move when it does start moving up. Another analyst thinks that there's a potential to go up by 50% in the bank sector over the next 18 to 24 months. I do think this is possible, but it's definitely on the much more optimistic side. So to try to understand why Warren Buffett made this move, we have to look at it from his perspective. First, Warren Buffett is a value investor. Value investing means that you buy up stocks that are cheap according to whatever valuation method you use. Secondly, these are quotes by Warren Buffett. Only buy something that you'd be perfectly happy to hold if the market shut down for 10 years. And similarly, if you're not willing to own a stock for 10 years, do not even think about owning it for 10 minutes. So from these few things, just two things, what value investor is and these quotes, we can tell that when Warren Buffett buys a stock, his timeline is at least 10 years long and he focuses on the value. According to these assumptions, Warren Buffett is not worried about whether he's going to make profit in the next few years because he's looking at it from a 10-year perspective. Let's keep looking from Warren Buffett's perspective. This is a PE ratio graph for Bank of America for the last 7 years or so. PE ratio is one of the most popular tools to use in terms of valuation for the company. And Bank of America has trailing 12-month PE of 12.3, and this is less than the average for the industry. If we look at this graph, it has the high of about 33 and low of probably 6 or 7. Right now, where it's at, it's definitely at the lower end, meaning the valuation is very cheap right now. Let's look at the most recent earnings report, Q2 of 2020. The Bank of America reported negative 3% year-over-year revenue. Profit also tanked, partly because they set aside $5.1 billion for provisions for credit losses. Quickly, what is provision for credit losses? It's basically what the bank estimates as potential loss because they will not be able to recover this due to delinquency, bad debt, bad credit. So it does go into company's financial statements as expense, meaning that it'll eat away at its profit. Let's look at the pros and cons of Bank of America, or more generally, the banks. If things really do get bad and the banks start struggling and the economy just crumbles, I think the government will bail the banks out just like 2008. I know that's not a good news overall, but I think of it as a giant safety net. Just to make it clear, I do not think things will get this bad. This is just worst case scenario. Second, the banks do pay dividends and rather on the higher side. So this is the good news. Now, because of current financial situation, it is capped currently, and if banks start to struggle more, it may get cut just like Wells Fargo's. We talked a lot about this. Currently, the bank stocks are very cheap. So if you were to buy into them right now, then you're getting a very, very good value for your dollar. Lastly, if we do assume a full return to pre-pandemic levels, because the banks have not recovered as well as the other sectors, it has more room to catch up and give you profit in its return to previous levels. Let's look at the other side. Second quarter GDP decreased by annualized percentage of 32.9%, which is unheard of. The first quarter was at negative 5%. I don't think it'll continue at minus 32.9%, but no one can deny the amount of impact that it has on the US economy. So we're definitely in a recession. The stock market doesn't feel like it, but the stock market is not reflecting true US economy right now. So even though the stock market is doing really, really well, US is in fact in recession according to the true data. This is actually a really bad news for the banks, because banks, compared to the other sectors, they reflect US economy more closely. The Fed has come out and said they'll most likely keep the interest rate very low for quite a while. This does eat into banks' profit margin, because interest rate is one of the ways banks make money. They loan out the money and they make profit off of the interest rates, but if the rate's really low, then they're not really getting much return on their investments. Lastly, I think this is the biggest issue with this, is that we still don't know what will happen to coronavirus. The numbers aren't really declining right now, so we haven't even gone over the hump. There are talks where now the Midwest region will be the next hard hit area. We've just surpassed the total number of cases of 5 million in the United States alone. So we don't know the timeline. We don't know if we'll actually beat this thing, which again plays into we'll probably be in a recession longer than people think, which is bad news for the banks. This list of cons is based on my timeline, which I mentioned as much shorter than Warren Buffett. Warren Buffett's looking at things from 10-year perspective. My longest perspective right now is probably 1 year. So for me, for my timeline, these cons will outweigh the pros. But if your timeline and your perspective matches more similarly with Warren Buffett, and you're looking at it from, say, 10 years, then the risk for all these cons are much less pronounced. If you're able to wait 10 years, likely the pandemic won't be an issue. The interest rate probably won't be this low. We likely won't be in recession anymore, and we've probably definitely recovered from minus 32.9% GDP. The longer your time horizon is, the more weight there is for the pro side. Now, if your perspective and timeline is a little bit closer to mine, and probably like 1 to 3 years, maybe 1 to 5 years, then I think JP Morgan is a better buy. First, it follows a very similar storyline as Bank of America. It's undervalued. It's struggling right now, low P ratio of 13. However, unlike Bank of America, in quarter 2 of 2020, it did make a 15% increase in revenue year over year. It has also set aside some money for potential credit loss, and that was at $10.5 billion for the second quarter. This is a PE ratio graph for JP Morgan, 12 months trailing PE ratio of 13.12, which is still lower than the industry average. Compared to Bank of America, it's probably more towards the middle of the high and the low, but it is still at a low PE ratio. So if we compare the two banks, these are the reasons why I like JP Morgan slightly better than Bank of America, especially if your time horizon is less than Warren Buffett's 10-year timeline. First, they both pay dividends, but Bank of America is at 2.76% versus JP Morgan at 3.62%. Secondly, JP Morgan has set aside more money for potential credit loss, more than double the amount. So Bank of America has set aside $4 billion for third quarter, JP Morgan at $8.9 billion for third quarter, meaning that I think JP Morgan is taking a more cautious approach, and they probably will be better prepared for worst case scenario. They're more protected. Like I mentioned, Bank of America had negative 3% year over year revenue versus JP Morgan actually turned a positive 15% year over year revenue thanks to better results from their investment division, which I think bodes well for shorter term because right now the stock market is doing super well. So this will affect JP Morgan more. On the flip side, many consider Bank of America to be more sensitive to interest rate changes. So if we do have low rate for a very long time, which the Fed has come out and said already, that will more negatively impact Bank of America than the other banks. Lastly, JP Morgan is at a slightly lower retracement level, meaning that there's more room than Bank of America to go back to its pre-pandemic level. This is the chart for Bank of America. As you can see, we're closing in on 50% retracement level, which lines up actually really well with previous, I guess, the shoulders of this mini head and shoulder pattern. Looking at it closer, since mid-July, when Warren Buffett started buying up Bank of America shares, it has started to form a nice uptrend with this trend line right here. Let me extend that. So as long as this trend line doesn't break, it will go up and break up over the $26.50 or so resistance. That was also where the shoulders formed in previous mini head and shoulder pattern. If all things go smoothly, this will continue to crawl up and potentially break up above this resistance. If it does that, then the next resistance line will be formed at the previous head, which will be around $28.50 or so. Comparatively, this is a chart for JP Morgan. On the retracement levels, it is below the 38.2%, so a little bit more room to recover compared to Bank of America. If we zoom in, it has started to make a higher lows, and this is much longer time frame. So this trend started from May 14th or so. So it's playing out a little bit slower than Bank of America, but it is definitely on an uptrend. So if we can break above this resistance line right here around $100, then I think it will be pretty smooth sailing from there up until probably this head level. Thank you so much for watching, and let me know in the comment section below what you think about Warren Buffett's latest move and if you plan on investing into the bank stocks like Warren Buffett. Please like the video and subscribe to the channel for more stock analysis and options trading. Best of luck to all stock traders and investors next week, and stay green until I see you guys next time.